Hi everybody, today is August 28th. I'm coming to you from my cell phone camera because my laptop camera just decided not to work today, and I wanted to share some valuable student loan updates as well as some data around other financial topics that are very important to not just understanding, okay, is this normal? Like, if you're asking yourself, is it normal that I pay X fees? I want to talk about that. Those X fees include ATM, overdraft fees. I want to talk about how much that's common, how many dollars Americans are spending on average, and sharing some of my advice and opinions around different banking fees. Okay, so that's what this video will be about. The first topic of news that's really vital I share and talk about is September 30th, literally in a month. The on-ramp into repayment ends. And what that means is that if you have missed any payments, have not made student loan payments, or missed payments, they have not been reported to, to the credit bureaus. However, once September 30th hits, if a borrower misses a payment, and after several payments they will be of missed payments, borrowers will now be reported and be on the pathway to default. And unfortunately, despite Biden's attempts to reform the student loan programs like rolling out Save, it unfortunately, and also having the Fresh Start program to take people out of default without having to rehabilitate or consolidate student loans during the pandemic, those programs do not exist after September 30th. When I mean do not exist after September 30th, I mean we're going back to business as usual after September 30th, which means if you don't make a student loan payment, it's going to ding your credit. And if you don't make many payments in a row, 3 to 6, depending on the servicer and how quickly they report, then you will be on your pathway to default on your student loans. I share this information. It's very important because whether you're a borrower yourself, paying on-time payments by putting your student loans into auto pay is very critical. But also, if you're a lender working with borrowers, knowing that this is going to be an issue, the default rates on student loans will start to go up in the next 6 to 9 months. And after we come out of this whole Save forbearance, and it's critical that people understand their options, understand the implications of missing payments, which include hurting your credit. If you already have a mortgage, and also other loans and other financial responsibilities, know that if you do go into default and don't respond whatsoever with a rehabilitation or consolidation, they do garnish your wages, your IRS refunds, even Social Security for those who are collecting it, so that you can make your payments. And that can, of course, harm your ability to pay your mortgage, your rent, and other financial obligations, right? Childcare, whatever else you have to pay, right? So I put that out there. Number one, be aware, September 30th, we go back to business as usual. The options to get out of a default goes back to what it was pre-pandemic, which is a consolidation or rehabilitation, which is challenging. And a rehabilitation takes 9 months. And also, once you go into default, you get put into a system called KVIRS that makes it very hard on the mortgage front. So it's extremely important that we as borrowers put our student loans on auto pay. And if you're a lender listening here, understand that warning student loan borrowers, if you start to see missed payment on credit, how important it is to pay on time. And also, if you can't pay, have a hardship, to get on an income-driven plan, because those are the best plans to save yourself from default, okay? Statistically, as well as based off of CFPB studies, income-driven repayment plans are the best options to being able to manage your student loans and afford them, because it's based on income. And so it's very critical that we get the word out there, whether it's your friends and family and or if you work in financial services, right? Because people defaulting on their student loans can literally ruin them for a very long time, okay? It impacts your credit. It impacts potentially wage garnishment from your paycheck. So let's avoid it. And also your repayment options. It's just hard to, because once you go into collections, your servicers transfer your loans to a collector. And it's very hard to negotiate with a collector relative to just enrolling paperwork into the federal student loan system, right? So I just wanted to mention that. In fact, the government pays more money to pay collectors to run after you than they will likely recoup. It's really sad the way our system's set up. I really think the student loan default system needs a rehabilitation itself, because the way we treat borrowers, to me, is just inhumane. People that need the most resources get the least. We at LoanSense have helped many people out of default. We've sat on lines listening to the collectors talk, and it's just, they're the least trained and biggest script readers I think I've ever encountered or heard in the industry. So you're not going to be talking to someone on the line that can actually understand options or reading from a script. And they're likely not going to give you a payment option initially that's even affordable or accessible. And unfortunately, it's a very hard and challenging system. So I wanted to mention that first and foremost. September 30th, on-ramp to repayment ends. Servicers are going to now start reporting late payments, and we are now on path to having more borrowers go into default more than ever. So that's warning number one. Number two is I want to talk a little bit about data on, I got a newsletter from the Financial Health Network, and I thought it was so compelling I wanted to share, because working with student loan borrowers and in financial services, working with lenders, I am intrigued always by what's happening with our borrowing environment, as well as financial literacy and financial trends. And I learned that in 2023, Americans spent $16.4 billion on fees. Literally 8 of that billion was spent on overdraft fees, 2.5 was spent on ATM fees, and 6 billion was spent on account maintenance. Okay. I want to emphasize, and I want to talk about this because this is huge. Overdraft. I would opt out of overdraft. For me, unless you absolutely need money that you don't have and you're willing to pay $35 to borrow $100 for a few days until your money gets into your account, I would opt out of overdraft, and I would rather have my card be declined than to pay a $35 overdraft fee or whatever it is, right? You can set up so you know your account to decline overdrafting ability, number one. So that is to prevent fees if in the event you don't need to borrow. If you're like, hey, I need to make a purchase that's really important, like food or something, and I need to make a $200 purchase and I'm willing to do the $35 overdraft because I'm in financial hardship right now. Okay, it's good to be consciously aware of that decision and to turn it on when you need it rather than to keep overdrafting. Because sometimes I hear of stories where somebody will just be unaware that their account is overdraft and they'll keep spending from their debit card and get like 5 overdraft fees, 5 times 35. Think about $150 in fees just by accident. There's ways to avoid those accidents by just turning off overdraft. Okay, that's number one. Number two, ATM fees. There's tons of different accounts out there that will credit back ATM fees. I know Charles Schwab is one of them. There are accounts you can apply that will reimburse ATM. I think Chime is also one of them. There's a bunch of internet solutions and accounts out there that you don't have to pay ATM fees. I highly recommend those because ATM fees can get crazy. I mean, sometimes you have to pay ATM fees to both banks, not just the bank you're withdrawing, but your bank as well. And you're like paying $6 to take out $20 or $40 or whatever it is you need cash for. So again, I would look into accounts, especially if you're paying a lot of ATM fees, into accounts that refund that money back. Okay, that's tip 2. My third and last tip, account maintenance. Again, a lot of internet banks as well as credit unions will not charge account maintenance fees, do not have minimum requirements. Like banks will do something like, if you do not maintain $500 to $1,000, you have to pay $20 a month for this account. I would try to enroll into a bank account if you have trouble making those minimums, like a credit union account or like an internet bank account like Chime, that do not have those minimum requirements, because otherwise you're spending a lot of money to maintain that account. And so those are three of my tips to combat this $16.4 billion of fees that Americans have spent. That, imagine, $16.4 billion. Imagine those fees could go into your savings, right? And I'm not trying to say that there's no place for when those fees may be appropriate, like an overdraft, but I don't think sometimes people understand how many fees we're paying. In fact, this article shares that 16% of the average American's paycheck is going to pay interest and fees. 16%. That is a huge portion of one's paycheck, that could be going into saving, or go into doing something nice for yourself, buying a gift for your mother, whatever it is, fill in the blank, that isn't going to enrich financial institutions for, just providing you with an account, right? And of course, the saddest part is the poorest and darkest skinned Americans are paying the largest amount of fees. And that's the saddest truth. That really gets me. The disparities remain, and the people that are paying the highest fees are the people that can least afford it. So, and also accessing products that are unconventional alternative products like payday loans, pawn loans, title loans, paying for getting their paycheck in advance, rent to own products, like renting your furniture instead of buying it. Those again have really large disparities, unfortunately, by racial and income breakdown. So I wanted to share that because those fees and all those different products, alternative products and fees, are unfortunately keeping low-income Americans low income, and so there are a lot of alternative products that are out there to reduce fees, and I would definitely look into those. If you want me to do a video on different alternative products that are lower fees, let me know, comment below. If you're having issues with your student loans, please come to my LoanSense. We have a phone number, we have an email, we have a chat, we can help you. If you are a lender, just know that we can help your borrowers prevent default, make sure they're on the right track to buying a home, and reduce their payment if they're in process already. If you're a borrower, please share, like, subscribe, and share with your friends and family if they can benefit from this information. Have a great day.